Welcome to your broker admin, where we dive into the latest review outcomes, share practical tips in our Humpday Helpers, and feature special industry guest interviews to help you stay on top of the game. Whether you're flying solo or part of a team, we're here to help you streamline your processes and work smarter, not harder.
Well, it's that time of the week again as we bound into another episode of Your Broker Admin, just in time for the Easter long weekend. But before we crack open episode 67, here's your weekly bonus history bite. On this day in history, April the 1st, the exact origin of April Fool's Day is still debated, but it might trace back to the late 1500s when the Gregorian calendar replaced the Julian calendar and shifted the new year from April the 1st to January the 1st. Those who missed the memo and continued celebrating on April 1st were dubbed April Fools. And in 1778, a significant moment for all of us. New Orleans businessman Oliver Pollock accidentally created the dollar symbol. It came about from his poor handwriting while using the letters PS for Spanish pesos in his ledgers. Hopefully he didn't miss the opportunity to patent that. Imagine the royalties. And speaking of Easter, as we move into the weekend, let's not forget the holy resurrection of our favourite seasonal treat, the hot cross bun. The perfect balance of sweetness and spice, much like the lending landscape when opportunities align perfectly. Moving on, we'll kick things off with the reviews wrap-up covering the week ending the 27th of March 2026. Another basket of goodies with good interest savings, more lending opportunities and some interesting client conversations from a purchase loan book. Then we'll jump into this week's Humpday Helper, where I share an important policy update from Great Southern Bank that you need to be aware of when resubmitting pre-approvals for formal. I'm Rob Cummings. Thanks for keeping an ear to the show, and let's get started. In this week's reviews wrap-up, we unpack outcomes from loan reviews completed during the week ending the 27th of March 2026. It was another great result this week with 9 completed reviews, obtaining rate reductions with $14,800 in combined interest savings achieved. That's 3 weeks in a row now with $10,000 in savings or more. On top of the interest savings, we also generated 5 lending opportunities totaling around $2 million, all of which were for internal refinances. There were a number of decent-sized savings outcomes this week. The first, a Westpac customer with a loan of $445,000, on which we obtained a rate reduction of 1.07%, giving them $4,700 in savings. We actually did another loan review for them through Adelaide Bank, where we obtained a $1,200 saving, so that's nearly $6,000 across 2 loans for them in total. Then there was another Westpac customer with a couple of smaller loans, where we're able to get them a rate reduction of 1.76%, equating to a $2,800 interest saving. The starting rates really were terrible, so I would suggest they had never been reviewed. And then we had an Adelaide Bank customer and an Auswide customer who both received a $2,000 interest saving from our review. There were others with reasonable outcomes, but these were the main ones. But we can't forget our friends at CBA, who handed out yet another miserly reduction of 0.02% for a $42 saving, which would barely be enough to put fuel in the car to head into town, let alone buy yourself a hard-earned drink. Now, for the lending opportunities, here's a snapshot of those from this week. The first is a client from the broker's old loan book that still sits with their old aggregator. Poor review outcome with ANZ on a loan for $225 has them wanting to explore other options with the broker. Another 2 were clients that are currently with Suncorp on rates that are outside the general market range. Both were keen to explore the market through the broker for potential better offers. Collective borrowings across the 2 clients is $1.25 million. And the final 2 were both with Bank of Melbourne on basic products that are not even close to being competitive. Product switching is an option. However, the clients would rather look at offers from other lenders first through the broker. The combined borrowings there was around $500,000. I have 3 client conversations I would like to share this week, which were all from the purchased loan book we are helping the broker to make contact with the clients. The first were Westpac customers with an owner-occupied and an investment loan. The loan settled way back in 2017. This was obviously a first review with these clients. The rates were okay, so no reductions forthcoming there. We rang and spoke with the husband. He advised they were going through a divorce and the investment property was going to be sold. He will get the net proceeds from that, and the home will go to the ex-wife. He'll be looking to buy again in the same area, so happy to have the broker's contact details. He's a Sparky by trade and is currently in Adelaide commissioning the Elon Musk battery system, 4.3 megawatt setup and the largest in the Southern Hemisphere. It was a really great call. We sent him a confirmation email for his reference, which also contained the contact details of the broker. We also contacted the broker to provide an outline of the conversation and a suggestion he may want to make contact with the client personally and perhaps offer some assistance with the separation in need, for example, discharges, etc. The next, another Westpac customer. They have the single owner-occupied loan, which settled back in 2019. Is on a really good rate, so again, no reduction on that one. We contacted the client and had a lengthy conversation. They're a well-known jockey who's been riding for about 17 years now. They've had many wins over the time. The conversation centred around their lifestyle and the things they've had to give up to be a jockey. They indicated they regret quite a bit, but has 3 boys, none of which he wants to be a jockey. They also mentioned that they have a Macquarie loan, which is an investment PI for about $600 against a valuation of $900, so a sub 70 LVR, currently on a rate of 5.95. This is before the upcoming April 2nd rate increase, which was not done through the broker. We helped to do a rate review on their phone via the banking app. They commented that they had approached the bank to change to interest only, but it didn't service under that structure. We sent a confirmation email with the broker details again. They really appreciated the call and will contact the broker when needed. We connected with the broker to discuss the client conversation. We mutually agreed that the broker would contact the client in a few days to personally introduce themselves and discuss in more detail. And the final one, yet another Westpac customer. The previous broker only used 3 different lenders for the entire portfolio, as it turns out. Again, single owner-occupied loan that settled back in 2010, so not large amounts outstanding. The rates were horrible though, and I would guess had never been reviewed. The rate reduction achieved from our review was substantial. We spoke with the client, and whilst they were a little cautious to start with, they loosened up when we were able to verify ourselves and told them about the rate reductions obtained. Short conversation really to confirm our review process and current details. We didn't want to overstay our welcome, so to speak. Advised we would confirm a review outcome in an email. We would expect them to be a little more open on the next call. The client thanked us for the work. The calls detailed here are just a small sample of the conversations we've been having with the clients from this purchase loan book. One client had recently sold and was buying another property, but had obtained finance elsewhere as their original broker was now retired and they didn't know the new broker, so went with the accountant's recommendation. Surprisingly, there were quite a few of the clients who just finalised a separation or in the middle of one. It also highlights the challenges faced when making contact with a new client base that you've just acquired. You may have sent out emails introducing yourself, but many people don't even bother reading these or simply forget the information provided. And that's with the clients where we have their contact details. There are a number where there are no loan personal details other than what was on the trial report. Quite a few of the loans were over 15 years old, and I'd hate to imagine when they were last reviewed. So if you're purchasing a loan book and the selling broker can't provide you with full client contact details, lender broker codes, and evidence of a structured and documented call program, then you seriously have to consider what price you are paying for that book. Effectively, you're just buying a trail income, which will disappear over time anyway. This week's Humpday Helper number 172 is letting you know that Great Southern Bank changed its policy for pre-approvals, converting to formal approval as at the 27th of March. These deals will now be reassessed at the current rate when resubmitted for formal approval. In a rising interest rate market, that could mean your deal no longer services, so something to be aware of to ensure you don't get caught out. This change to policy brings them in line with many of the other lenders, so I would suggest maybe not relying too much on pre-approvals where the servicing surplus is thin in this current environment.
Thanks for listening to your broker admin. If you've got feedback, questions, or a topic you'd like covered on the show, you can now send it through via our Contact the Show page. The link is in the episode notes. If the link's not clickable in your player, just copy it from the show notes or head to the episode description on your phone. A rating on Apple Podcasts, a review on Podchaser, or a follow on Spotify all help the show reach the people it's built for. This has been your broker admin for those who like their process neat.